Hi, this is Hyperwave. I am Leah. I'm here with Tyler. There is blood in the streets in the market, so obviously we had to come to you today. Going to talk about traditional markets. We're going to talk about Bitcoin. We're going to talk about anything that Tyler desires to talk about and finds interesting. Sorry, it is very dark. I am not a vampire that I know about, but this is the first place I could jump to. It's a fabulous place nearby, but volunteering at an incredible organization down the street. Just I'm on like cloud nine of what they do. So I will get off this gush about how incredible this nonprofit is. And anyways, people just want to hear you, Ty. Ty, just kidding. How's everything going? How are you?
Well, not all that great. This was a horrible day for anybody that has exposure to the market. Not only because it dropped a lot, but because a lot of us were expecting a lot better things to be happening right now, particularly me, and they are not happening. So we're going to go right to the screen, and we're going to take a look at not only indexes, but we're going to take a look at some sectors and some stocks. This is going to be very brief. We're going to try to keep it to 30 minutes. Everybody knows what happened today, but let's get some perspective on what it means from a consensio point of view. So here we go. Let's do it this way and then do it that way and then do it that way and that way. And that way, and that way. Okay, now we need to make this big. Oh, you can never make it big if you do it the way I just did it. Isn't that odd? Yes, Tyler, that is odd. Okay, one more time. The way we're going to do is make this small. We're going to make. Wow, isn't that weird? It's different than Zoom.
All right, Tyler, while you go, I'll look on your screen when it's up and ready. Everybody, keep giving me some questions. This will be a fun one. Also, what you guys are thinking about. Tyler, it's still small, but you almost got it. Boom, and Tyler's on.
Boom bada. That's the 2-year yield. Thanks to one of our Twitter followers. The yield on the 2-year, and this is the yield on the 10-year. The yield on the 10-year is 2924 or 2.924. 2.924, and then we go back to the 2-year, which is at 2.803. So that's all you need to look at is the 10 and the 2. Forget all this 5 and 2 and 5, all that stuff. None of that is statistically significant. What you want is the 10 and the 2. If the 10 and the 2 invert, then that's not good. 7 out of the last 7 recessions were called by an inversion of the 10-year and the 2-year. They have not inverted. Again, the 2-year is 2.80 and the 10-year is not. The 10-year is 2.92. So 12 basis points. It's not a lot. And take a look at the drop in the yields on this weekly basis on the 10. It's huge. And that's what's gotten us close. And yes, some of the shorter terms are inverted, but they are not statistically significant. This is the one that is statistically significant, and it has not inverted. Okay, enough of that, but thank you for sending us that information. Let's get right to, let's just take a quick look at Bitcoin, which is at 3890. There's our magic lines. What are the magic lines? The magic lines are the green and the red phase 2 of a hyperwave, and all of this nonsense going on down here is below it. You can see the 3 moving averages in free fall, and right now we're sitting at 3890 approximately. couldn't really get back over the 4. That's all we're going to do on Bitcoin, because that's not the news right now. It is for all of us, all of us that want Bitcoin to get where it's going, so we have the possibility of going back up. But at this point, this is all old news. And I've told you before that the 7th phase of a hyperwave is maniacal because it takes forever to get where it's going. And it throws in a lot of head fakes along the way. So you just have to be very, very patient. Don't be thinking about jumping in, because it looks good on a short-term basis. Let's take a look at we're going to start with the indexes. We're going to start with the Dow, which we looked at yesterday. And it had done very well. It was up towards the top. It was above the moving averages. It's now cut back down through the long-term moving average, cut down through the intermediate, and the short term is dropping steadily. We've got to wait till Friday. These are weekly closes. That's the way I look at everything in making decisions. Everybody can use their own systems, but for me, Consensio, as well as Hyperwave, long-term views of things is what I am interested in. I want to know what the trend is, so we have to wait till Friday, but it's not looking good. The Dow is down 800 points basically today, and it still is not calling for 100% short. We are still above previous lows. Long-term moving average is slowly moving up. It will not be doing that for long if we keep messing around down in these areas. But notice how much lower these candles were in the previous 2 weeks, even with the big drop off today. So that's important. The Dow, we said, was the strongest yesterday. It still is. This is the S&P. The long term has turned down on the S&P. All the other moving averages are down below each other. That's a full bearish posture. We have a full candle below the long term. If this stays this way till Friday at the close, I would be 100% out of the S&P, as opposed to 50 right now. I know I'm cutting it close here on these calls, but that's what the market's giving us, and we've got to react to what the market gives us. We don't try to assume what is coming next. We have to assume what's coming next to the extent that you need several options in your mind. Options, in this case, meaning alternatives in terms of what could happen. But you let the actual price action and then the technical indicators tell you what is actually happening right through the moment. And so I would wait till Friday before I jumped overboard. This is the NASDAQ 100. Bad day. Long term has slightly turned down. Everything else is negative. Again, 50% is basically what I would have in cash, with the possibility of going completely bearish, 100%, depending on the weekly close. The NASDAQ itself, the bigger composite, same story. The Dow Jones Transport got its head handed to it today, down 4.5%. And below its 200-day moving average, below all of my moving averages. I'm still using the ones we did yesterday for those that watched, which basically are the 3, the 7, and the 30. And we dropped below everything with this huge candle today. We're very close to a Dow sell signal, Dow Jones sell signal, and that could come on Friday with closes down in this territory. I think it's important for a real Dow theory sell signal to drop below this previous low and to have the Dow Industrials also drop below its previous low. Now, if you're considering this the previous low, we've already done that. If you go back to this one, we have not quite done that, but that's not fair using two different lows in Dow theory. We're not using this one. This was the low in the Dow transports. Therefore, I would consider that the sell signal if we close lower than that. Now we closed lower than that here, but then we rallied back up, and now we're coming back down. In any case, we're counting angels on the head of a pin with all of this analysis because of the fact that we've had basically this flat area for 10 months with half the candles above it and half below it. The S&P is still up for the year, 1%. That seems incredible, but that's because we started the downturn from these highs, which were up about 10%. So the other indexes are slightly negative, but the S&P is still slightly positive. So even though it seems when you're in this that the world is falling apart, you've got to keep some perspective here. We will be fully out with before we have 10% losses for the year. And I hope we will be out before we have 3 or 4% losses if this is indeed a bear market. Unfortunately, we've only got 2 days to go before the Friday close. Now, if we just go sideways, it's not going to help us too much one way or the other. If we go up big, we could actually close above long-term moving averages on Thursday and Friday. Too early to make those calls. And what you don't want to do with Consensio is being jumping in and out and in and out, 100% in, 100% out. The way I set up the rules for engagement in terms of getting out of an uptrend or getting into an uptrend off of a downtrend is taking small steps as the evidence builds, and then larger steps as it becomes clear that danger is growing. And that's the way to approach all of these things. This is the Russell 2000. You will note that this is a new closing low on this move down. We've taken out this low. There's a wick slightly lower, but we closed on the lows for the day, down 4.4% on the Russell 2000. But you'll notice this one is slightly lower. Again, counting angels on the head of a pin, but you've got to be very precise when doing certain types of technical analysis. You don't want to assume even right up to the closing minutes exactly how things are going to shake out. Some of our clients have gotten too aggressive in the up move, gotten too aggressive in the down move, and we talk about that. And anybody that wants to discuss that with me, I'll be more than happy to do that. But I'm trying to make it as clear as I can through our webinar on Consensio that if you haven't read, you can still get. I mean, if you haven't listened to, it's still available. And we've got some people that are taking voluminous notes that they're sharing with some of our research groups. And I really appreciate the work that they're doing. It's brilliant. And at some point, maybe we put it all together in a book. And clearly the people that are doing all the work on it will get all of the credit. Hopefully I get all the money, but they'll get all the credit. No, that's not true. I'll share it with everybody that's helping. Okay. Now what we want to do, those are the indexes and they deserve little or no more comment. Very distressing. I want to take a look at sectors very quickly because I'm going to go right to the good ones. This was actually up for the day. This is the utilities. Some people sent today questions about why certain electrical companies were doing well. And the answer is basically they're tied to utilities. And utilities tend to be very strong in weak markets because institutions are looking for a place to park their money. They can't raise cash in almost all cases, and therefore they go for the strength. And when they go for the strength or the less weak, you get this kind of movement. So people can be parking in here um, instead of being in cash, but just be careful, because if this turns out that the market turns around and starts going up, then these are going to underperform. That's called sector rotation. We will do a whole webinar on sector rotation. We've had a lot of people ask about it. That's sort of my specialty. And we've only talked about it briefly in some of our vlogs, but take a look at the good versus the bad. This is the good. And then any one of these others we look at, this is US consumer goods, not horrible. This is the consumer services, which are like the consumer durables, and it's a much better chart. But then when you look at things like the financials, long term is clearly moving down. Everything else is moving down. Price is now below it all. This is another one of those Friday things. A lot of the banks got creamed today. This sector was down 4.5%. The oil went opposite today. It perked up a little bit, but no matter how you read that chart, this is not a good chart. This is in a full bear market. And regardless of coming up to here or coming up to here or coming up to here, it's still in a full bear market. Let's take a look quickly at something that lost 4.6%. Home builders, they were trying to build off of these horrible lows. It's been in a bear market, still in a bear market, way too early to even consider putting money into it. And you can see why. Down almost 5% today, right back into the soup. Let's just take a look at one that didn't do too horribly. It was only down 3.5%, which is the technology group. But we do have a downturn finally. Who would ever think that the long-term moving average of the technology sector, led by the FANG stocks, would actually be rolling over and going down? You would have known that if you're looking at individual stocks, and that's what we're going to do very quickly now. Again, we're going to keep this short, but I want to be as clear as I can about how bad this situation is. Now, this is a funny example. This is Tesla stock, and Tesla was actually up today slightly, but down here at the bottom, where it was clearly in a bear market, prices below everything moving down, long-term moving average moving down, it held this 250. 250 is an important number because you can't see it on this chart, but there's a phase line from a hyperwave coming through right at 250 at that point. It held, and now we are very close to being in a bull market. We've got the long term moving up, intermediate term is moving up, the short term was pulled back a little bit. It's about to go up, and the price is up here. I would not be buying it at this point because we need to take out these highs along here, but it is in a full bull market now, while all the other stuff is going the other way. Amazon was down 6% today, came right back up to its moving average. Long term got shot down. Moving average is still moving up, but you can see not by much. By Friday, it's probably still going to be too close to call in terms of the long-term moving average. We will do a hyperwave on a number of these stocks, just not tonight, because a lot of them appear to have broken phase lines to the downside. Some of them absolutely have, but I'd like to take a very close look at them. Right now, we're just going to stick with what most of you know, because a lot of you attended the Consensio webinar. This is Google. Long-term has just ticked down. Same story as Amazon. We tried to get up to it, and then we got crushed today. Google down 5%. Facebook down only 2% today. Who cares? It's in a full bear market. Apple down 4% today. The long-term has turned down. It's in a full bear market. Microsoft. Now, there's a distinction between being in a full bear market and being in a phase 5, 6, or 7 of a hyperwave. You can recover from a full bear market like Tesla did. Any of our indexes, even though Consensio is saying they're in a full bear market, they can recover. And just as we get out 5, 5, 5, 10, 15, 25, and 50, we get back in if Consensio starts moving back up. That's different than Hyperwave. When Hyperwave phase 4 breaks, it's granny bar the door, put your parachute on and don't play any games, because you're going to get a crash, then you're going to get a recovery. If you understand Hyperwave enough on the phase 6 recovery, you can make a lot of money. Or if you didn't get out on the crash, on the phase 5 crash, you can get back out almost at where you would have gotten out anyway, and sometimes even higher. So some people are playing those by buying calls on the phase 6 up move. But you've just got to be very careful, because when phase 7 starts, like it did in Bitcoin, then no matter if everybody in the world thinks it's not going to happen, it's still going to happen. So in the rare instances where you can find a hyperwave, it is the Bible in terms of all other technical tools, in my humble opinion. Okay, that is Microsoft. Let's go back to Microsoft, because this is pretty remarkable. Microsoft is basically in a full bull market, even though this is a big down. It was only down 3% though, but it had broken out last week, above all 3 moving averages, after the short and intermediate had turned down and we had penetrated the long term. That's what I mean by Consensio is just preparatory to something big happening, but you don't want to play around after the fact, after something big has happened. Consensio is designed to get you out early in a trend change. That trend change might then flip around again and go back up. And yes, you will have gotten out and gotten in again and cost you some commissions. But that's what it's designed to do. What you want to do is get out of every downtrend as it starts, so you don't get the next 90% down. That's the point. You want to be completely in cash and then let the market tell you what it wants to do. You don't want to let the market start falling apart and then keep second guessing yourself every time it drops another 10% and another 10%. After the first 20% down, you say, well, I'm too late now, I'm not going to get out. Then it's 30% down. Well, this is really bad, but I'm sure not going to get out. Maybe I should start buying. And then like in 2007, 8, and 9, the NASDAQ then went down another 20%, another 20%, another 20%, and finally it was down 80% before you got to the bottom. And usually what people do there, if they haven't jumped out of a window, is they say, that's it, I don't know what I'm doing, and they get out when it's down 80%. Then the next trend starts in the up direction. They won't touch it with a stick for the first 5 years, and they lose out on the first 150% gain like people did between 2010 and 2015. Okay, in any case, we're showing you a bunch of things, some of which are still looking good. Cisco is looking great. It's in a full bull market, even though it lost 2.8%. So Microsoft, Cisco looking very good, regardless of all this other stuff going on. So we look at the indexes first, get a general sense. Look at the sector second, get a more specific sense, and then you look at individual stocks. And if individual stocks, this is Comcast, it's looking very good. It wasn't, the long term had been moving down for a long time, but each individual stock, even if it's in the same sector, doesn't always correlate with all the other stocks. So you have to get very specific, or just stick with the big indexes if it gets too complicated going into sectors and individual stocks. FDX, this is not good for the overall economy. This is the FedEx Corporation. It's in a full bear market. It tried to rally off a bottom, and now today it was down 6.3%. Happy Hanukkah and Merry Christmas. FedEx is saying that things ain't all that great. Okay, Intel looking pretty good, relative. Netflix looking pretty horrible. We believe that this is a phase 4 break. This is a 5, this is a 6, and we are in a 7. Now Consensio comes along. Hyperwave got you out way before Consensio did, if everything I'm saying is correct about Netflix. And we need some verification of some things down here. But anyway, notice that the long term did not turn down until after the 6 was over on the upside. So there's all kinds of interesting things that you need to consider about how these various tools fit together, timing wise and otherwise. And this is the essence. Quick plug. We did enough plugging. Some people were complaining about it in our last vlog. Quick plug. This is what we are talking about this Saturday at 2 o'clock in our webinar on how all of these different things can be used together. We've taught them separately, but the real time of what the market is doing is giving us a lot to work with in terms of teaching tools, because there's so much activity going on. Okay, this is Square. Some people have been asking about Square, and I'm trying to come to some conclusions about it. My only conclusion at this point is for Square to have dropped 11, almost 12% today, after trying to overtake the long-term moving average. Luckily, it didn't take out 2 weeks ago, but this is not looking very good. You don't want to drop 12% in a day if you're struggling to regain upper levels. And I'll just do a couple more. Micron Technology, MU is horrible. And I had some people that were 100% in their retirement accounts in MU back in here. And as far as I know, they're still in it. And that's a shame. I never got a chance to work with them or teach them Consensio or anything else. Okay. So that's just a very quick rundown of what is going on with the stock market as of today. Oops. Did I do that right? I think I did.
You're good, Ty. It's you.
Okay. And it's 7 o'clock, and I am going to wrap this up. Bitcoin is not interesting at this point to me. It is to some people. It isn't to me. I believe it's going to 1,000. Next stop is 3,000, about $800 less than we are right now, and I think it could get some support there, but I would not be buying personally at that level because I think it's going to drop another 60% from there. Stock market, it's too close to call for me. I've got 50% in cash approximately. My clients have got 50% cash, and we can go either way. We can get back in or we can bail out. And we might know that as early as this Friday. We will continue to update you. Tomorrow is a dead day relative to the markets. They're closed, so we'll pick it up again on Thursday. And with that, I'm going to turn it back to the lovely Leah.
Thanks, Ty. I think that you picked your words. I hope that everybody can hear me deliberately when you said day tomorrow. Unfortunately, the markets, yes, are closed tomorrow because of George Bush Sr., as is the federal government. So for anyone that is curious why the markets are closed. And yes, for shilling, I will do it one last time though, but lucidinvestmentstrategies.com products webinar. And definitely sign up right now just using PayPal. That's some fun stuff. We're learning more about a couple of hardware wallets that we're going to be utilizing. So just upgrading our tech game. Hey, Ty, you want, actually, you did a smashing job by ending right at 30 minutes, but can I ask a question too?
Of course.
Okay. Just bring in my own selfish ones that I think gives all our viewers and myself a more well-rounded perspective, because I'm curious about this. So I'm always going to throw in a bit of an FA stuff. So at least my friends in FA right now regarding the markets, they're curious. So well, I'd say, here's my question to you is, usually there's a lot of forced selling right now, right, by hedge funds. And I know that there's a cross asset strategist at Nomura. I was like a big fan of studying Nomura. So Nomura Securities, so like trend following quant funds. My understanding is they're in the process of shedding like $50 billion in notional exposure to equities. How much do you think that forced selling may be affecting what's happening right now, and just thoughts on it?
Well, we talked very briefly about this being called silly season on Wall Street, meaning November and December, because money managers get paid a bonus at the end of the year for their relative performance to indexes or guidelines and to their competition. And what that means is they want to be able to get out of stocks that are hurting them, and they want to add to stocks that are helping them. And that's why you see like the utilities going up, because everyone's rushing into that to hope to get relative performance compared to other people. But there's another trick that they all play, and they're probably really getting killed by playing it, which is they start buying very illiquid securities. Illiquid meaning there's not much volume every day, and they've got billions of dollars to play with. So if they throw a lot of money into an illiquid security, what's going to happen? The price is going to go up. And if the price goes up and they can keep it up until the end of the year, then their relative to performance to other people will be poor. Now, that doesn't mean they're buying good stocks. It means they're buying illiquid stocks. But what's just happened with the small cap, which tends to be illiquid, is it's getting crushed. So anybody that started playing that game early back in November is getting their head handed to them, and that can cause forced selling as December goes along. The reason you usually have year-end rallies in November and December is basically because of this game that is played on Wall Street about playing for your bonus. And then they reverse a lot of those positions in January and February because they aren't particularly great investments. It's just that they could move the prices around. So it's difficult enough looking at fundamental and technical analysis to make the right decisions at the right time. During funny season or silly season, which is around election times and at the end of the year, it gets even more difficult because there's huge amounts of money sloshing around, not for fundamental reasons, not for technical reasons, but for personal reasons and corporate reasons about trying to end up December 31 slightly ahead of your competition and of the indexes. So that would be my answer.
And a pretty good answer it was. All right, everybody, have a fantastic evening. Thank you so much for tuning in. The great questions. Oh, brownie in motion. That's fun. Okay. And we'll try to take them next time. Thanks so much, Ty.
Okay, great. Good night.